Okay. Okay, hopefully this is good. Everything's working out well. Let's see chat. What's going on with chat right here? Hey, what's up, Yug? How you doing? All right. So let's see how Apple does with their earnings. Once we see how Apple does, we can get good news all around. Own a lot of Apple stock, so it'll be beneficial if it does well for me. Okay. Hopefully everything's good. When did you call? What do you mean, when did I call? Let's see how this goes. What do you mean? Wait, how are you confused what this is? It's an earnings call. Apple's earnings call. You know, it tells you how well the stock company does. And Amazon and Facebook and Google all report earnings today. It's huge. I'm not sure how you're confused. If you're an investor, you should know what it is. Alright. Oops. See how the stock market closed today. Okay. Put it right here. Should be good. Alright. Well, we'll see how Apple and Amazon and Facebook and Google does today. It's gonna be huge how it goes. Let's see, Apple, get the latest. Thanks for all the follows and subscribe, guys. Appreciate it. Let me see if it works. Let's see if the subscribe works. Okay, that works. Okay, yeah, there we go. This box right over here. Okay, we'll find out how all these companies does. Yeah, Facebook pushed back theirs to today, so we'll see how they do. Let's add Amazon, AMZN. Can you do 2? Yes. And then you can do Google, which is what? What is Google? GOGL. Actually, what is Class C? Google is GOG? Yeah, maybe we should just go GOG. Okay, let's see how it does. Alright, we're gonna see how it does. Don't forget, break the like button, everyone. I appreciate you guys. Break the like button. And you guys share the stream. I appreciate it. How many of you guys are brand new? So, let's see how it does. Let's see how it does here. So we got Apple, Amazon, Google, and we'll do a Facebook too. We'll do Facebook. We'll add Facebook to it. Yeah, I wouldn't invest in Kodak, man. Too much going. Here we go. The stock market closed. Let's see if they did it. Let's see if they beat their EPS. Appreciate you guys smashing the like. Can you guys see if the subscribe or the donation button's working? The second time I started live streaming, I'm not sure the stars. See, can you guys see if the what is it called? What's it? Super chat's working for my streams? How much Amazon I got? I used to own 20 shares of Amazon and I sold out of it and then I bought different type of shares. I sold it around 1600 and I bought it around 1400. I made a mistake. But you know, I used that money to buy more Apple, Tesla, Microsoft, so other companies, so it still did well overall. Let me know, I call 40 PE for Apple on this channel, yeah. Hey, can you guys hear me okay? Is the music too loud or is the voice call okay? Alright, here we go. Let's see. Alright, here we go. Best hour. Alright, tech. You need tech. Earnings. Alright, we'll see once they report numbers if we see any of these things spike up right now. If we see these numbers spike up, we know, or go down. So Facebook up 7%. What did Facebook do? Facebook is up over 5% after hours. Did they crush earnings? I bet you Facebook beat their earnings. So Facebook did well. Facebook is up over 5% after hours in trading. So Facebook beat their earnings. Okay, so we know Facebook beat their earnings today. Congrats to you guys who own Facebook. I used to own $20,000 worth of Facebook and then I sold out of it. The stock was too stagnant for me for like a whole year. I was like, the stock hasn't moved anywhere and I sold it. And now the stock finally moves up after I sold it. I appreciate all the likes and the share, guys. If you guys have like $1 or $2 or $3 to spare, if you guys can check Super Chat and if it works. First time live streaming, I want to see my notifications working on the stream. So you have like $1 that you can spare. I appreciate it. CCX might merge with Top Golf. No, I didn't hear about that. I didn't hear about that. Okay, so let's see. Facebook shot up. Let me see what Facebook did, what their EPS was. How much did they crush it? Facebook earnings after market. Facebook up almost 100%. Facebook earnings. Here we go. So Facebook daily active users 1.79 billion versus 1.74 estimates. So that means almost 40% of the whole world use some type of Facebook platform. Their revenue, they beat it by $1 billion. Oh my gosh, they beat it by 1.3 billion. So Facebook beat 1.3 billion. Their EPS $1.8 a share, and they beat it by hand over fist. Dang, dude, Facebook did well. Holy crap, Facebook crushed earnings. So if you own Facebook shares, congrats, dude. That thing's popping off right now. So Facebook, dang, guys. Facebook popped off today. Look at that. Facebook up over 5% after hours. So let's see. So you can see Facebook did very well. Facebook earnings $1.80 versus estimates of $1.39. Quarter two revenues 18 billion, 69 versus 17 billion. So that's huge. Facebook totally crushed their earnings. And then you can see Mark Zuckerberg very happy right there. Look at that. Look at how happy Mark Zuckerberg is. All right, let's see. Amazon is up too. Let's see, AMZN. Take a look at Amazon. Amazon, breaking. Amazon buys the rest of the S&P 500. Amazon, Google. Hey, Amazon reports. Okay, I don't know if this is accurate. Amazon reports quarter two, $10. That's not right. No, that's not right. No way. They beat it by $9? No, that can't be. No way. Are you serious? Holy crap. Oh, $10 a year beats estimate by $7 billion. Holy crap. Look at Amazon. It beat their revenue by $7 billion. It's trading up after hours right now. So Amazon did well. Look at that. Amazon crushed their earnings, dude. Jeff Bezos is more rich than he ever was before. So congrats if you own Amazon. You guys totally crushed it. Facebook beats earning, Amazon beats earning. Now we're waiting for Apple. Now we just gotta wait for Apple's earnings. Look at that, dude. Hey, you guys, I appreciate all the likes and the follows and the shares. Let me know if you're brand new in chat, guys. All right, so Amazon totally crushed their earnings. Look at that. Jeff Bezos. How did they generate such revenues, dude? Quarter two EPS was $10.30 versus $1.05, dude. That's insane. That's absolutely insane. Yeah, that's absolutely insane. Hey, can you guys do me a favor? You guys have $1 to spare. Can you guys see if the super chat works on the stream? I don't want to see my notifications working. I appreciate if you guys have $1 to spare. So it looks like Facebook, Amazon, Apple's up 2%. Did Apple crush it? Here we go. Let's take a look at Apple. If Apple crushed their earnings. All right, let's take a look at Apple. Apple. No news on Apple yet. However, Apple is up 2.3%. They're up 1% after hours, but we haven't had earnings. So we know Facebook and Amazon beat their earnings, but we don't know what Apple or Google is yet. We're still waiting on Apple and Google. You bought 1000 Facebook at $18? Yeah, nice. Yeah, if you bought around 140 when it went down to 140, that'd been a good gain for you guys. But we'll see. See how it goes. Hey, pal, thank you for the $1. Did the notification go off? Did you guys see if the $1 went off on the stream? Did the super chat $1 go off on stream, guys? Okay, Apple and Google. That's incredible. Look at Amazon, dude. It beat EPS $10.30. Estimates was $1.50. You know how incredible that is? You beat EPS by a whole $9. Yeah, you saw it go off? Okay. Thank you guys for seeing super chat. Hey, Archie, thank you for the $5. Archie and Pal for the $1. Thank you guys so much. Did the super chat go off the stream though? That's my question. I don't see it going off on the stream. There you go. Okay, so yeah, notifications go off. There you go. Appreciate it. There you go. It's a little bit delayed. Thank you so much for the $5, Archie. Appreciate it. So let's see what Apple did. Did Apple report or Google report? Well, see, Google's up 2% after hours, but there's no news that they beat their earnings. Do Apple exclamation point Google. See how Google's doing. No news of Apple or Google yet, guys. We got Amazon beating it, Facebook beating it. Both of those companies did very well. So if you own Apple or Google, you guys did good. Yeah, you see on YouTube. All right, thanks guys. Thanks for checking out to see super chats working. I appreciate the $1, Pal, and Archie. Thank you for the $5. I'm kind of curious, guys. Since you're watching me, how many of you guys were already subscribers, and what video did you find me on? And if you're brand new, how did you find this page? Thank you for letting me know, guys. All right, let's see. Apple and Google. Apple and Google. We just need Apple and Google left to see. Both waiting earnings. Okay. Let's see what Yahoo Finance says. All right, let's take a look.
Pretty much in line with what North America did. They did turn a slight operating profit internationally, $345 million, but that's been a loss-making company over the last few quarters. So with a surge clearly in orders, the company being on the top line and guiding up, the international business by some of those positive steps for a quality quarter. Second quarter. Stock is popping after hours in line with Facebook. All coming up roses.
A 2 for 4 miles. Quickly. And you mentioned the stock's up over 4 hours. Looking at Bloomberg's billionaires index, richest man now worth $1 billion, nearly as much.
Big tech guys, Shauna.
Yeah, 2 for 4 miles. Just wanted to jump in here really quickly in terms of these earnings. And yeah, you mentioned the stock's up over 4% after hours. And I'm looking at Bloomberg's billionaires index. Jeff Bezos, the world's richest man, now worth $180 billion. Bezos, the world's richest man, now worth $180 billion, nearly as much as number 2 Jeff, number 2 Bill Gates, and number 3 Mark Zuckerberg combined. Nearly. Interesting about his wealth too. I loved it when he got divorced. What was that, last year, and paid tens of billions of dollars to his now ex Mackenzie Scott, who was just made a big philanthropic move this week, and people were crying that he was so poor. He's now wealthier than he was before he got divorced and had to pay out the big settlement. Yeah, it's crazy stuff.
How do you pull that off?
What's that?
I wish I knew how to pull off that trick. I could have used it at one point in my life.
Okay.
All right, let's go back to Amazon's business and move on from the divorce proceedings here. Just want to talk a bit about something that came up a lot yesterday during that hearing, which is third-party sellers, and the company just seeing really rapid growth in this part of its business, faster than any other of its major business units. $18.2 billion in revenue from third-party sellers during the second quarter for Amazon. That's up 53% over the prior year. The growth rate in the first quarter was 31%, and that was an acceleration from what the company had seen. So that third-party business, which cost
$4
so
billion
much scrutiny
for
from lawmakers
protection against
yesterday,
illness, dude.
really, kind of eyeballing it here, the crown jewel inside of Amazon's, kind of core businesses, online, physical, third-party, subscription, and AWS as they break them out here. Subscription service revenue is up 30%, basically in line with what we've seen, $6 billion. AWS growth, 29%, so the slowest we've seen there in a couple of years from AWS, again, $10.8 billion. And as you'd expect, physical retail, those sales were down 13% to $3.7 billion in the most recent quarter.
Yeah, it's interesting there, the slowing AWS growth of 29%, because even though that is pretty significant, similar to what we saw from Microsoft when we did see
all right,
slowing
Google
growth
beat earnings, guys. So we got Google.
But again, very interesting. And Miles, I'm happy you brought up their third
So we
party
got
numbers
Google
as well,
beating earnings, guys. So
at
Google's
number,
numbers are out. So we're just waiting on Apple.
in revenue, just really
So here's what
highlights
Google
how
says.
important that third-party
Google's
business
numbers.
is to Amazon here.
Did I mute everything here?
All right, we're going to take a quick break here in the final round,
Okay.
but when we come back,
So let's
we'll
take a
have
look at
more
Google.
on the results from Amazon and Facebook.
Google
Plus, we're waiting
beat
on
their
Google
earnings
and
as
Apple.
well.
All that when we come back.
Here we go.
Quick
So
2-minute break.
Google's estimates. Google revenue was 38.3 billion versus 37.34. So they barely beat their earnings. Google barely beat their earnings, but they did beat it. Okay. So it looks like Facebook, Amazon, and Google all beat their earnings. So Google did beat estimates. Their EPS was $10.13. Estimates was $8.21. So they beat both on the EPS and on the revenue. So that's good news if you're a Google holder. So looks like Google. Congratulations if you own Google. You guys did well. Look at that, man. That's amazing numbers on Google. Wonder if they're still doing buybacks. So it looks like all these tech companies did very well. You guys should be happy if you own any of these stocks. All of your stocks performed today. I own Google. I own Apple. I used to own Facebook and Amazon, but then I sold out of those recently. Oh, that's good. So let's see what Apple. Did Apple report yet? Anyone got Apple's reports yet? Anyways, guys, thank you so much for subscribing. I see these subscribings going off. You guys are doing a great job. Thank you so much for liking the videos. If you guys have $1 to $2 to spare just to see my super chats working, to see the super chat donations working, I appreciate if you have $1 to $2. I appreciate that. So let's go ahead and still see what Apple is doing. We're still waiting on what Apple. Here we go.
At $10, estimate was several dollars lower at $8.07. Net revenue without the traffic acquisition cost 31 point. Estimate lower 35 billion. Operating margin coming at 17%. Estimate. Go down the various properties. YouTube ads to Google properties, Google Cloud, other bets. All acquisition costs 31.6 billion. Estimate was for lower 30.45 billion. Operating margin coming in at 17%. Estimate was for 15%. Then you go down the various properties from YouTube ads to Google properties, Google Cloud, other bets. All beats here when it comes to revenue. I'll just give you YouTube because that's been focus, especially since they started breaking that out, and it is advertising dependent. That came in at 3.81 billion. Estimate was for a little bit lower at 3.76 billion. And then their silo, their big warehouse
What?
operation, which is Google Properties. That's where their most of the revenues come from. That's 25.13
They're
billion.
doing a
Estimates for
$26 billion buyback on the stock.
And
That's
just
huge.
a couple of other stats
That's
here.
huge.
They are agreeing to buy
Google's
back
stock
up
price is
to an
gonna go
additional
up.
$28 billion in their Class C capital stock. These tech companies, these tech behemoths, have been some of the few that are actually engaged in.
Oh, you found me through
buybacks
Workhorse.
right now.
Thank
Share
you for
buybacks.
subscribing.
Apple, another notable one. Amazon, not so much. And then just a statement here accompanying the release. Second quarter reflected gradual improvement in ads, strong growth in Google Cloud, and other revenue. And by the way, that cloud revenue number came in at 3.01 billion, just besting by about, looks like $100 million. The estimate was for 3 billion. And I just add, on the call, it's going to be interesting because Sundar Pichai, he got the most questions
we just
from
need Apple.
Congress yesterday. And he got kind of tripped up towards the end. We've been talking a lot about that. So be interesting to see if anything comes about that on the call. But again, looking at the stock here, it is up 1.7% now. So trending a little bit higher in aftermarket trading.
Yeah, getting a little bit of a boost here. But again, it's interesting taking a look at the reaction in Google's stock price here after hours, a little bit more muted than what we initially saw from Amazon and Facebook. All right, Jared, thanks so much. For more on this, we want to bring in Jason Ware. He's CIO of Albion Financial. And Jason, let me just get your thoughts on the results that we've gotten so far. We've heard from Facebook, we've heard from Amazon. We just got Google's results. Given the rally that we've seen in these names and their high multiples, what is your reaction to the numbers that we got?
Yeah, I mean, Amazon is a big wow, beating by 8 billion on the top line, which was already a high bar given the expectations that they've benefited handsomely from the pandemic, that is, in their e-commerce and in their cloud business. That was a really big number. And, the beat on earnings for Amazon. And Amazon is a volatile, the earnings are a volatile number quarter over quarter because they spend so much. I mean, last quarter, you remember they put 4 billion, all their profit, into COVID-related investments and expenses.
Dude, Amazon's up over 7% for the day, dude. Look at that. Amazon, $3,000. $3,200
years was a big one. Now, Google looked good across the board, not quite as breathtaking as Amazon, but good enough. I think certainly better than feared. I think there was some concern that given the business they're in, that there was maybe a step down in advertising spend. There certainly was relative to their longer term trajectory, but it wasn't as bad as expected. Revenue down about 2% year over year. We'll take that. Facebook we don't own, but the numbers look pretty good. We used to own it. A number of reasons why we sold it, but looks like they're doing okay as well.
Yeah, Jason, I wanted to ask you about that since you do own the other two stocks that we were talking about. I know you also own Apple. You don't own Facebook. What would get you to buy? What are you looking for? What are you not satisfied with in the company?
It'd be a change in culture. I think the business is doing really well, but the culture at Facebook, I think, leaves a lot to be desired. Some of the ways that they've handled data privacy, some of the ways that the way they handled the Cambridge Analytica issue was concerning to us. Some of the things that they were doing to encourage usership on their platform was less than above board in our view. So that was one of the reasons, the main reason why we sold it back a little while ago.
Jason, these tech companies, they've been favored here amongst investors, obviously.
That's
but
good
as we
for
look
now,
ahead
Yahoo
to the rest
Finance.
of this
Thank you.
quarter and then going into the fourth quarter, do you expect money to continue
All right, guys,
to
so
flow
we got
into these
Google,
names, or where else do you
Facebook,
expect it to go?
And
Yeah, it's a great question.
Amazon,
and I think that these
all
numbers
beating
today
their
certainly
earnings, and
underpin
those
the
stocks
notion
are
that
going
we'll
up.
probably see
All we're
a
waiting for right now
refresh
is
of the
Apple.
tech trade. I mean, they came
Once
into a
we
bit of
hear
exhaustion
Apple,
here
we'll see
midsummer,
evolve it.
which
Look
shouldn't have
look at this
surprised anyone
Facebook.
given the multi-year run that
Facebook
technology's
is up
had, and
over
indeed these FANG names have had, and then through the
right now.
pandemic.
That's insane, guys. Facebook is up 8% right now. Amazon's up 6% after hours. Apple is up 2.3%. Microsoft's not doing anything. Google's only up 1%. So we're just waiting for Apple right now. Once Apple shows they can beat, then that means today was huge. Today's been a good day for all the tech stocks. All the FANG is doing well. So that's all we're waiting on. Incredible. Absolutely incredible. So I'm kind of curious. Everyone in chat, tell me which stock you own for these companies and how many stocks do you own? Kind of curious. And I hope a dividend growth. I hope they announce like, hey, we're going to increase our dividends. Dividends for everybody. That would be cool if they increase their dividends. All right. Logitech. Okay. Facebook, Amazon, Facebook, Apple, Amazon, Cirrus Logic, Apple stock. You own VTI, 5 stocks of Apple. Okay, so you guys all own a little bit of it. Yeah. Let me know what state and country you guys are from. What state and country are you guys all from? Okay, we're still waiting on Apple, man. I mean, Apple is... I mean, look at this. Look at how crazy this is. You got Amazon. Amazon beat their earnings and their stock is over 3,220. I bought 20 shares Amazon at 1,400 and sold at 1,800. So, man, I can't believe I sold out on Amazon back then. Sold out Amazon when it was 1,800. I mean, look at Facebook. If you own Facebook, look at this. Facebook's at 251. They're up 8% on the day, guys. They beat their earnings as well. That's incredible on Facebook. Now, I mean, Google's not up that much. Look at Google. Even though they beat their earnings, their stock barely performed today. Only 1% with even good earnings from Google. Now let's go ahead and we're just waiting on Apple here. Oh, Apple's up. Apple is up. Apple earnings out. Let's see what Apple got. Apple is jumping right now. So Apple, still waiting. Why is the stock up 4%? Come on, Apple. Apple is up. Why is Apple up? Look at this. Apple is up almost 4%. 5% after hours. What's the report? What's the report on Apple, guys? All right. Do we have news on Apple? What's the news? Here we go. Apple. Apple just reported. I got the numbers, guys. We got the numbers. Here's Apple. Apple reports quarter 3 EPS $2.58. Okay. EPS consensus was $2.04, so they beat it by 54 cents. And then consensus. And then they got $59 billion in revenue, 59.7, and the consensus was 52.25 billion. So that means Apple, Google, Facebook, Amazon all crushed their earnings. All 4 of those stocks did it, dude. That's absolutely insane. And you know what's interesting? Microsoft did it too. Microsoft beat their earnings and their stock went down. So dang, guys, look at that. Apple is up 5%. 6%. Look at that. Apple is jumping up right now. Apple is blowing up, guys. Here we go. Let's take a look what they say.
What here the stock closing about 300 today. So that stock will, I guess, about a $90 per share stock or so once the split is effective. Exactly.
26 billion. That's no point billion. 3 billion in A. Miles laid it estimate was for 38.3 billion in A. Andy, Miles laid it out. The huge headline that we're getting here from this report is this 4-for-1 stock split from Apple, and I think there was some speculation as to when we would, whether we would see it from companies like this, but Apple making that big announcement today.
Yeah, I mean, this is a whole thing going on, trying to disintermediate those guys who've been like selling these partial share things. And, basically a lot of people were following Buffett's lead by never splitting your stock. Then Buffett had to disintermediate those guys with B shares. Other people don't want to have multiple classes of stock, although, of course, Google's already done that. But I'm not really surprised about that. It'll be interesting
4-to-1
to hear
stock
about
split.
new iPhones.
Apple is splitting their stock, so the stock will be at $100.
Those were
More
mitigated
people
by
invest.
strong online sales. People just sitting around home. Oh, I need a new laptop to be working at home, et cetera, et cetera. China's a big question for them going forward. And they are definitely a little bit different from those other three stocks, the other three companies. As the company likes to point out, we make stuff and sell real stuff as opposed to some of the others.
That's great for Apple shareholders. You're getting a 4-to-1 stock split.
More numbers on Apple quarter. Yeah, Andy, just want to come back with a few more numbers on Apple's quarter as we go through the release here. The services business, $13.1 billion in revenue there. That's actually a bit light relative to what the company reported last quarter, which was $13.4 billion on the services side. And so Apple actually making up for what was a flattish sequential period on the product side, where revenues were $46.5 billion in the most recent quarter. And just going through the geographic breakdown and comparing it to what we saw in the first quarter, most of the increase was in the Americas business. $27 billion in revenue in the Americas business during Apple's third fiscal quarter, which is the quarter ended June 30. $25.5 billion is what we saw in the last quarter. Europe was flat, 14.2 this quarter versus 14.3. China was flat, 9.3 in this quarter versus 9.4 in the last. And so just looking at Apple's growth driver right now, it was, I guess you could kind of impute that it was people in the U.S. at home buying stuff, buying iPads, buying Macs, buying new phones. The rest of the business performed fine, but was mostly flattish compared to last quarter.
Yeah, just one quick thing, and this is the big takeaway, Jerry. We're going to go to you because you got some really good stuff here, but they beat by $7 billion. I mean, top line.
Apple beat by $7 billion.
Pretty damn impressive. Okay, Jerry.
Well, I just want to comment on the stock split because that's getting some attention now and the effects that it's going to have on the indices. Now, with respect to the S&P 500 and Nasdaq, that's not going to change. Those are market cap weighted or float cap weighted, but the Dow is price weighted. So Apple's trading at $404 right now. You can divide that by 4, so it's only going to be contributing 1/4 as much to any advance or any decline. And you can argue whether that's good or not for the index overall, that it doesn't become too saturated with one name. But I'll just say when Boeing rushed up from about $100 to $400, they definitely didn't do that. And when Boeing crashed, it hurt the Dow. So this could be conceivably good for the Dow in terms of just balancing things out. We'll have to see what happens going forward. But with a market cap like this company has, it's going to definitely be, its presence is going to be known in the other indices.
Yeah, well, certainly. I mean, it will be interesting to see if it becomes more of a favorite here amongst retail investors as it becomes a little bit more affordable here to buy some of their shares. So that, of course, could influence some of the moves here, at least in the short term, for the stock. But I want to bring in, we have a special guest here for Apple's results, and I want to bring in Daniel Flax, he's Senior Research Analyst at Neuberger Berman. And Dan, let me just get your thoughts overall on the numbers that we're getting from Apple. We can talk about that 4-for-1 stock split. We could talk about the fact that it's better than expected results, and I think there's some worry around the iPhone number, but it actually looks pretty strong for the quarter. Dan, you're going to have to unmute.
Dude, it's crazy.
Dan, you're going to have to unmute.
Apple, Google, Amazon, Facebook all crushed earnings today.
Great to be with you as always. It does look like a robust set of numbers considering the environment that we're in. I think the key here is really this broadening of the revenue drivers. You've got the iPhone franchise, which is proving, I think, more durable than some of the skeptics would have you believe. Even with a sluggish smartphone market, the iPad, the Mac, wearables, I think is a really exciting area. So on the product side, the company is continuing to deliver. We had a new iPhone SE. There's the new iPad Pro. So healthy set of results. Again, though, given the environment, I think the key is execution on the product cycles and continuing to delight customers.
Hey Dan, that all looks pretty good right now. We got Apple above $400 here for the first time, but we have a call coming up and a lot of news can happen on this. People are really interested in the trajectory for a 5G phone. Could the call
5G
pour a lot of hot water
next phone?
on what we're seeing right now?
Jen, I think as we know, Apple is not going to comment on future devices. And so it is, of course, likely they're going to have a 5G iPhone later this year. It's probably going to be
No, I don't think
relative
Apple is going to launch 5G
to
this
launch
year. Probably next year.
Of devices in years past, for the simple reason that the logistics and the global effort has been hampered, obviously, by the pandemic. But I think what's important when you get an iPhone or a new iPhone later this year, and as we think into 2021, is that this integration of hardware, software, and services, the application ecosystem, that is what's really helpful to enabling Apple to differentiate. So I think
Hey, thank you so much for subscribing. I appreciate the subscribe, guys, and those who hit the like button.
It's not just iPhone, which is, I think, an important factor.
Yeah, Dan, let me ask you more about that diversification, because you mentioned the fact that the wearables it's exciting here at least, but how significant of an opportunity do you think this is for Apple, and how big of how much do you expect it to become a bigger part of Apple's story here over the next couple of years?
I think it's going to only increase, and I say that because if you look at the watch, you have applications like the ECG app to take an electrocardiogram, or emergency calling if someone falls. It looks like they're going to add sleep monitoring, hand washing checks, and so these are helping people to lead healthier lives. And in fact, in some cases, as we all know, it's helped to save lives. So I think that Apple's move into the healthcare space is interesting. I think it's very, very early innings, and it's going to combine some of the elements that we've seen them do in other areas, which is to partner, to work with others. Apple cannot do it all on its own, but their platform, I think, will serve them well over that time period.
And Dan, just sort of to follow up on that, everyone was waiting for Tim Cook to invent the next world-beating product, right? And what he did instead, perhaps, is invent a world-beating portfolio of services, which is decidedly less sexy than what Steve Jobs did, but perhaps as much or maybe even more effective because of the sustainability of creating an ecosystem. Is that fair to say?
I think that's right. And I think certainly Jobs was instrumental in so many things across the company. But if we think about the Tim Cook era and where this company's going, their ecosystem has over 1 million apps. It just continues to grow, and it's global. It's men and women throughout the U.S., in all continents who are developing apps. The ability to empower people to build on top is really what contributes to the vibrancy. And as users, it's the fact that it's fun, it's easy, it's secure. You're able to have you control your data. Your data can move between your products, but you are the one that's in control. Those are important elements which I think help position the company well.
All right, Daniel Flack, Senior Research Analyst at Neuberger Berman. Always great to have you on the show.
Wow.
Thank you so much for giving
How
us
many
your
shares do you
perspective
guys own
on
on Apple and
See you again
Facebook
soon.
and Amazon,
Great,
Google?
thanks for having me.
Again, taking a look at Apple shares here after hours is just around 5%, crossing above $400 a share for the first time. We're going to have more on these results with our
All right, guys. So Apple,
editor, Dan
their
Halley.
earnings
We'll be
call
right back.
starts in 17 minutes. We might hear news on 5G. Amazon earnings will begin very soon as well. Let's see when Amazon starts their earning. Amazon starts their earnings at 2:30, so half an hour after Apple will start their earnings. So we'll listen to Apple, and then the other stream will switch to Amazon. But Amazon earnings will start in 47 minutes. So overall, great news if you guys own any of the big tech stocks: Facebook, Amazon, Apple, Google. Microsoft beat their earnings too, but the stock went down shortly after. Sorry, those who own Microsoft, but you can see it did very well. So let's go ahead and move Got Amazon over here. If you're watching the Amazon stream, do you guys want to hear Apple's earnings until Amazon starts, or do you guys just want to focus on the Amazon? Vice versa. So anyways, appreciate if you guys are able to. If you guys have like a couple dollars, $1, $2, or $5 to spare. If you guys want, you can send some love for me live streaming all the big tech stocks in the super chat below. You can see the super chat link if you want to just toss in like a couple bucks. I appreciate it. So we're covering all the major tech for you guys to enjoy. Okay, so once that starts. So a lot of people, it still surprised me, a lot of people keep asking, what does a stock split mean? Since there's a lot of people who doesn't know what a stock split is. So let me make sure that looks good. Move myself a little bit bigger. There we go. So what a stock split is, basically the stock gets splitted up. So if you own one stock, since Apple's doing 4-1 stock, your one stock turns into 4 stocks, and that stock is worth 1/4 of the value. So let's say, since Apple stock right now is at $400, those stocks will turn into $100, but you have 4 of them. So that's what stock split is. Now, if a company ever does a reverse stock split, it usually means that company is in huge financial trouble, which means it requires, like, a company that just did this was Aurora Cannabis, just did this in Chesapeake, where they did a 200-to-1 reverse stock split, where it requires 200 shares to turn into 1 stock. So that's what a reverse one is. Usually you don't ever want to hear reverse stock split. That means the company is in very deep financial trouble. But I appreciate all of you guys who do like the stream, and you guys hit the like button. Thank you guys for doing that. So 15 minutes, we're going to hear Apple of their delivery. If there's going to be any huge groundbreaking news, if Apple is going to announce 5G phones. I highly doubt they'll announce 5G phones. We have Google spending $26 billion in share buybacks. That means Google's stock price is going to go up since there's less share in the market. So Google, they're due $26 billion. I don't know the actual numbers on it, but I could see the stock being $1,700, like reaching Tesla range $1,700. If they do the buybacks. I don't know what's the period of time of the buyback, but we'll see what the period of time buybacks. Now, I think Amazon, what they should have done was a buyback too. Amazon should have done no, not a buyback, a stock split. They should have split their stock, in my opinion. If Amazon did a 10-to-1 split, that would have been great. Even a 20-to-1 split would be great. 21 split would be amazing. So Warren Buffett just like turned his shares from millions to billions, maybe. You can never go wrong investing in Amazon, in my opinion. No, good person. It's good news. They're doing a stock split in a good way. A reverse stock split's bad. They're doing a regular stock split. Yeah, I don't think Apple really need to do a stock split. Apple didn't need to do a stock split, but it's good news, you know. I don't mind. I mean, that means more regular people can invest in Apple at $100 instead of $400. Amazon needed to do like a 25-to-1 split, man. Amazon is so expensive, no one can like invest into it. Only a fraction share. Yep. Amazon Q2's out. Hey, thank you so much for liking the video. Did you see that little dog? $10 donation by Godlike Machine. Thank you so much. Hey Nukem, I used to watch your videos years ago, but I fell off the train. Imagine my surprise when I found this randomly. I guess you know that you've grown up and when you watch finance videos. Thank you so much for a $10 donation, Godlike. If you guys don't know, I am a professional video gamer. I have a video game channel of over 1 million subscribers. Right there, you can see Godlike's donation right there. So I have a YouTube channel, a video game YouTube channel of over 1 million subscribers. I started this finance channel April 19th, 2020, because I was just tired of playing video games. Even though I play video games for a living, I want to talk about finance. I want to be smart with my investment. So I made a finance channel, and it's great to see one of my gaming viewers back in the day who watched my gaming YouTube channel decides to grow up like I did and look into finance and building wealth. So thank you for that $10 donation. I appreciate it. No, I don't stream Twitch. I'm exclusive Facebook partner, but I make YouTube videos on video games for a living, over 1 million subscribers, and then I got contacted by Facebook to stream on the platform, so I'm a full-time Facebook streamer as well. But thank you so much, Godlike. So 10 minutes, Apple's earnings gonna happen in 10 minutes. You guys are interested? If you're watching on the Amazon stream, Amazon's earnings starts in 40 minutes. Do you guys want to hear Apple's earnings first or Apple's earnings and then switch to Amazon, or you just want to wait for Amazon? Let me know in chat. That's where I saw you on the game. Oh yeah, you found me through my video game channel? Nice. You had Amazon stock since 2016. You don't plan on selling it. If anything, you should have... Dude, Blank, I hope you kept buying more Amazon shares back in 2016, man. Okay, looks like the Amazon stream doesn't want to hear the Apple earnings and then switch to Amazon when it comes out. Most people just want to wait for the Amazon earnings. As you can see, it starts at 2:30, so Amazon starts half an hour after Apple. So I guess since you guys don't want to hear the Apple's earning call, I'll just leave it on the Amazon. I am doing an Apple stream at the same time. I'm dual streaming. Believe it or not, I have 2 streams going on. One is an Apple earnings stream and an Amazon earnings stream. So we're going to listen to the Apple one and the Apple stream, and then when the Amazon starts, we'll start the Amazon stream. When the earnings call starts. But I want to let you know, if this is your first time in earnings call for Amazon, Jeff Bezos doesn't go on earnings call. He's the only big tech CEO that doesn't go on earnings call. You have Tim Cook, the CEO of Apple, goes on earnings call, Mark Zuckerberg for Facebook, and then you have Google CEO, and then you also have Elon Musk who goes on the earnings call. Jeff Bezos is so rich, he's like, it's not worth my time to even go into these quarterly calls. I'll just use a proxy. What usually happens after good earnings for FANG stock? Do people sell after good earnings? Usually, from my experience, I only been investing in the stock market for 2 years. I started in 2018, February 2018, and that was a rough time to enter because you had the trade war with China, you had North Korea shooting rockets all the time, and then you just had that December where the correction, like 10% correction, before we had a big bull run in 2019 and 2020. Based on what I see, usually earnings, the stock does pretty well, unless it's a red day. If it's a like heavy red day, even you have good earnings and your stock was up, on a heavy red day, your stock eventually goes down. There's nothing your stock can't maintain a heavy good news of earnings, no matter what the good news is, if everyone is heavy in the red. So generally, we have the S&P 500 consists of heavy percent in Apple, Microsoft, Google, Facebook. Those are all big players in the S&P 500 and in the Dow and the Nasdaq. So since they all had good earnings, there's a high probability that tomorrow's stock market will be in the green. Now, don't quote me on that. Unless we get some bad news that the virus somehow starts infecting the whole world even greater scale, and then there's a bad news on the vaccines, and there's a bad news from Trump, then the stock market will go down. No matter how good the earnings, the stock will go down. So generally, I expect if everything is just normal the way it is now, and nothing changes in 24-hour period, all the stocks should go up, especially the big tech stock, the Nasdaq. Link your Apple stream to this chat. Sure. Here's my Apple stream. Let me see if I take this. Let me see. Can someone post a? Let me see if I can grab a link to my Apple stream here. This is good to do. Here we go. Apple's earnings call right here. Grab the link. And then I post it in chat. All right, if you're on Google, you want to see Apple's earning, or Apple's earning is in 5 minutes. You know what? I'm just gonna play on both streams. We're gonna play Apple, and then until Amazon starts, then we'll switch it to Amazon. Everyone's gonna get to hear Apple, and then for the Apple stream, I'm not gonna switch to Amazon. For Amazon stream, I'll switch it to Amazon once it starts. So let's go ahead and go to Apple relations. Oh, no, not with China. Apple investors relations. Earnings call. Okay. Okay, there. You can see Apple and Amazon earnings call right there. Okay. Let's see. Let's see where all the stocks are trading at right now. Okay, so let's see. Amazon's up 5%, Facebook's up 7%, Apple's up 6%. Google is up 0.5%. So even though Google did very well in their earnings, for some reason the stock is not blowing up like the other stock. I don't know why. Do you get more dividends because of stock split? Do you get more dividends because of a stock split? Let's see. Hey, thank you for subscribing, John. Let me see. Do you get more dividends of a stock split? That means you own more share of stock, and usually a company pays a dividend based on your stock, right? You get a percentage of dividend on how many stock you own in a company. I would assume you get more dividends since they do a stock split and you own more stocks, right? That would make sense to me. They pay you on how much stock you own on your dividends, so it makes sense. Yug, I'm gonna time you out, bro. There's no news on Neil, kid. If there was a Neil's earning, I would have made one, dude. Please do research before asking silly questions. No, you don't earn more dividends because you own more shares, so it doesn't work that way? I thought they usually pay dividend by per share, right? Oh, dividend is based on value. So how much value you have? Okay, so that makes sense. So we got Apple's earnings in 2 minutes. Let's check in if they started yet. Nope, still music. Wait, does dividend get split too in a stock split? Maybe the dividends get split as well. Okay, yeah. So I guess you get your dividends doesn't change since you own the same amount of stock, but the dividend gets a decrease because there's more stocks available or shares. Okay, so your dividend doesn't change at all. So the dividend doesn't change at all since the dividend gets split along with the stock. Okay, I get it. Hey, thank you for subscribing. Appreciate it. Do you have any Apple stock? Yes, I do. I can show you my portfolio. Make sure I don't show you guys my numbers. Let me see how I did in the stock market today. Let me see. Since a lot of you guys are curious of my portfolio. Alright, since a lot of you guys are asking my portfolio, I can show you my portfolio for a second. So you can see my net worth's at almost at $750,000. I have $144,000 in cash, $336,000 in investments. My housing assets, I own $1 million worth of houses, but my mortgage is $749,000. So that's my assets. I can show you what my Apple balance is. Oh look, my portfolio only was down 0.03%. Let's see this earnings. No, still playing music. My portfolio, I am only down 0.03% on a red day versus the S&P 500 38%. Let's check on my investments. Stocks. As you can see, my biggest portfolio is Tesla. I have 8% on Tesla and 5.4% in Apple. So I own about, I think I own a couple hundred Apple. I don't know. All right, let's see the earnings. No, they're still playing music. Do I invest in crypto? No. I don't invest in too crazy a speculative market. Let's see. So I own 17 shares of Apple there, plus another 29. So let's say 30 plus 39. So I own 47 shares of Apple. Yeah, you're up 40% year to date. I am up 10% year to date. So today, yeah, so far year to date, I'm up 10%. Let's hear this. Oh, still music playing. Who knows? Maybe Amazon Amazon earnings might start first. Hey guys, I appreciate you guys being here. Thank you so much for liking the stream and subscribing. You're brand new. Thank you for being here. If you guys have like $1 to $2 spare, maybe $5 spare, and you don't want to show some support for showing you guys all the big techs earnings today, Apple, Google, Facebook, Amazon, I appreciate the super chat donations if you guys are able to. If not, I just appreciate a like and a subscribe. You're awesome.
Hey everyone, welcome thank you for joining us. Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of COVID-19 on the company's business and results of operations. Actual results or trends could differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed periodic reports, Form 10-K and Form 10-Q, and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements or information which speak as of their respective dates. I'd now like to turn the call over to Tim for introductory remarks.
Thanks, Tejas. Good afternoon, everyone. Thanks for joining the call today. Before we begin, I join the many millions across this country in mourning and memorializing Congressman John Lewis, who was laid to rest earlier today. We've lost a hero who walked among us, a leader in the truest sense, who urged this country to aim higher and be better until the very end. I was humbled and fortunate to know him, and as an Alabama native, his example inspires me still. It now falls to every American to be a living memorial to John Lewis and to carry forward the work and the mission that defined his life. Throughout the call, I'll speak in greater detail about Apple's support for equity and justice, topics of great urgency on a number of fronts. But first, I want to pull the lens back to consider the quarter in full. In an uncertain environment, Apple saw a quarter of historic results, demonstrating the important role our products play in our customers' lives. We set a June quarter record with revenue of $59.7 billion, up 11% from a year ago. Both products and services set June quarter records and grew double digits, and revenue grew in each of our geographic segments, reflecting the broad base of this success. As always, and especially in times of real adversity, what makes us proud as a company is not merely what we did, but how we did it. As millions march for justice in big cities and small towns alike, we committed $100 million to launch Apple's Racial Equity and Justice Initiative, as well as new and renewed internal efforts to foster diversity and inclusion at all levels of the company. As COVID-19 continues to represent great risk for individuals and great uncertainty for our communities, care and adaptability are defining how we conduct our work wherever we work. In some places, that has meant responsibly reopening our operations and retail stores with enhanced health and safety precautions. In others, where the virus has reemerged, it's meant taking the challenging but necessary step of reclosing stores. I'll touch on these topics more in a little bit, but first I want to offer some more context on the quarter's results. Due to the uncertain and ongoing impacts of COVID-19, we did not provide our typical guidance when we reported our results last quarter, but we did provide some color on how we expected the June quarter to play out. I'd like to contextualize our results in terms of that color across each of our product categories, beginning with iPhone. iPhone revenue grew 2% this quarter. In April, we expected year-over-year performance to worsen, but we saw better than expected demand in May and June. We attribute this increase in demand to several interactive causes, including a strong iPhone SE launch, continued economic stimulus, and potentially some benefit from shelter-in-place restrictions lifting around the world. We expected iPad and Mac growth to accelerate, and we saw very strong double-digit growth for these devices this quarter. This remarkable performance came in spite of supply constraints on both products. We're working hard to get more iPads and Macs into customers' hands as quickly as possible, recognizing how integral they have become to working and learning from home, providing entertainment, and staying connected with loved ones. Wearables growth decelerated as we expected, but still grew by strong double digits and set a revenue record for a non-holiday quarter. Building on powerful new features built into watchOS 7 and Airpods Pro announced this quarter, we are very excited about the many opportunities in front of us for this product category. These strong results help drive our installed base of active devices to new all-time records across each of our product categories. Reflecting the deep integration of hardware, software, and services, services generated a June quarter record of $13.2 billion, up 15% year over year. As we mentioned during our last call, there were two distinct trends we were seeing, and they played out as we thought. First, results for advertising and AppleCare were impacted by the reduced level of economic activity and store closures to a degree that was in line with our expectations. Second, we had strong performance in our digital services with all-time revenue records in the App Store, Apple Music, video, and cloud services, as well as elevated engagement on iMessage, Siri, and FaceTime. Customers are loving new offerings across Apple services like Apple News Today, our new daily audio briefing, and Greyhound, our new summer blockbuster starring Tom Hanks. In fact, Apple TV Plus just hit a history-making 95 awards nominations and 25 wins and accolades. Based on these results and our performance over the last 4 quarters, we are proud to announce that we have achieved our goal of doubling our fiscal 2016 services revenue 6 months ahead of schedule. We're conscious of the fact that these results stand in stark relief during a time of real economic adversity for businesses large and small, and certainly for families. We do not have a zero-sum approach to prosperity, and especially in times like this, we're focused on growing the pie, making sure our success isn't just our success, and that everything we make, build, or do is geared toward creating opportunities for others. The App Store is a great example. This quarter, a new study by independent economists at the Analysis Group found that the App Store facilitated more than $500 billion in commerce globally in 2019 alone. Especially in a time of COVID-19, you can measure economic resilience in the ways in which the App Store supports remote ordering for restaurants, digital commerce for small businesses, and an enduring entrepreneurial opportunity for creators and visionaries. Keeping learning vibrant and impactful in the time of COVID-19 is a priority everyone shares. Earlier this month, we announced significant enhancements to the Develop in Swift and Everyone Can Code curricula, and we launched a new professional learning course available exclusively to educators. And just 2 weeks ago, our Community Education Initiative added 10 more historically Black college and university regional coding centers to our roster, bringing the total to 24 locations nationwide, 12 of which are HBCUs, and 21 of which serve majority Black and brown student populations. In Apple's backyard, we announced that we're allocating $400 million of our multi-year $2.5 billion affordable housing commitment to new housing construction, homebuyer assistance programs, and support for those at greatest risk of experiencing homelessness across Silicon Valley. Apple's results this quarter are only possible due to our people and their ongoing ingenuity, flexibility, resilience, and determination during these ever-changing times. I want to thank our AppleCare and retail teams who have paired exceptional service during a time of intense demand with great adaptability during a quarter where stores have reopened in some places and reclosed in others. A dedicated team of specialists and experts has shouldered the task of caring for the well-being of our teams and communities, store by store, location by location, with evidence-driven granularity and agility that is unrivaled anywhere. Innovation from adversity certainly defined this year's Worldwide Developers Conference as well. This is an event where traditionally Apple's worldwide community of developers gathers together to share, celebrate, and do big things together. Though we could not be together in person, Apple set a new standard for what online events can achieve with our celebrated all-virtual event. The results here speak for themselves. More than 22 million viewers tuned in across all of Apple's streams. For our developers, we distributed more than 72 hours of video content. That's 3 full days of video. The week saw more than 200 direct-to-video engineering and design sessions and about 4,500 person-to-person appointments with developers across 227 virtual labs. And of course, that's even before you get to this year's announcements. From iOS 14, which boasts a radical redesign to the home screen, powerful updates to messages, streamlined and effortless app clips, and even greater privacy, transparency, and controls, to major updates to Apple Pencil, Siri, and calling and iPad OS 14, to much anticipated sleep tracking, new fitness and wellness features, and unprecedented customization in watchOS 7, to the new macOS Big Sur boasting the biggest redesign upgrade to macOS since OS 10. No less important for Apple's innovation roadmap is our transition to Apple Silicon for the Mac. This 2-year effort will achieve both unprecedented performance for the Mac and a common architecture across all Apple products. Looking forward, we are profoundly optimistic about Apple's future, and we recognize that with this success comes a real responsibility to lead with our values, because those values help make that success possible in the first place. We are just as proud of our announcement this month that Apple will be fully carbon neutral by 2030 across our entire supply chain, and including the energy use of every device we make, as we are of any hardware innovation, because they spring from the same instinct to leave the world better than we found it. We're committed to standing with those marching for their lives and dignity through our new $100 million commitment to Apple's Racial Equity and Justice Initiative. And we're deepening our diversity and inclusion efforts internally, because our future as a business is inextricably linked with the future of our communities. There are times when things seem to move slowly, when needed progress, economic or social, seems bogged down, when the instinct to turn away from the horizon and hold on to what you've got feels inescapable. And then there are times like this, when people of goodwill step forward, when progress unmoors itself, when the insistence of hope forces something new. This is an immensely challenging moment. COVID-19 is still devastating many places, and we have work left to do to care for the health and well-being of the communities in which all of us live and work. But no community of people, whether a company or a country, can afford to miss this call when it comes. At Apple, we never have, and we don't intend to start now. With that, I'll hand things off to Luca.
Thank you, Tim. Good afternoon, everyone. Our June quarter was a testament to Apple's ability to innovate and execute during challenging times. Our results speak to the resilience of our business and the relevance of our products and services in our customers' lives. Total revenue was $59.7 billion, a new June quarter record, up 11% from a year ago, despite a 300 basis point headwind from foreign exchange. Our performance was strong across our entire portfolio, as we grew revenue in each of our product categories and set June quarter records for Mac, for Wearables, and for services. Similarly, our results were very strong all around the world, with growth in all geographic segments and new June quarter records in the Americas, in Europe, in Japan, and rest of Asia Pacific. Products revenue was $46.5 billion, up 10%, and a June quarter record. iPhone returned to growth, and we saw very strong double-digit growth from iPad, Mac, and Wearables. Lockdowns and point-of-sale closures were widespread during April and impacted our performance, but we saw demand for all products improve significantly in May and June. As a result of our strong performance and the unmatched loyalty of our customers, our installed base of active devices reached an all-time high in all of our geographic segments and all major product categories. Our services continue to grow strongly, up 15% year over year, and reached a June quarter record of $13.2 billion. We set all-time records in many services categories and June quarter records in each geographic segment. I'll cover this in more detail later. Company gross margin was 38%. This was down 40 basis points sequentially due to unfavorable FX of 90 basis points and a different mix of products, partially offset by cost savings and services mix. Products gross margin was 29.7%, decreasing 60 basis points sequentially due to FX and a different mix, partially offset by cost savings. Services gross margin was 67.2%, up 180 basis points sequentially, mainly due to mix. Net income was $11.3 billion, and earnings per share were $2.58, up 18% and a June quarter record. Operating cash flow was also a June quarter record at $16.3 billion, an improvement of $4.6 billion over a year ago. Let me get into more detail for each of our revenue categories. iPhone revenue grew 2% to $26.4 billion, with customer demand improving as the quarter progressed. COVID-19 was most impactful during the first 3 weeks of April, when lockdowns and point-of-sale closures became more widespread in many countries. We saw marked improvement around the world in May and June, which we attribute to an improved level of customer demand, helped by the very successful launch of iPhone SE and economic stimulus packages. Our active installed base of iPhones again reached an all-time high as a result of the loyalty of our customer base and strength of our ecosystem. In fact, in the US, the latest survey of consumers from 451 Research indicates iPhone customer satisfaction of 98% for iPhone 11, 11 Pro, and 11 Pro Max combined. Turning to services, as I said, we set a June quarter record of $13.4 billion of revenue. We had all-time record performance and strong double-digit growth in the App Store, Apple Music, video, and cloud services. Our new services, Apple TV Plus, Apple Arcade, Apple News Plus, and Apple Card, are also contributing to overall services growth and continue to add users, content, and features. At the same time, customer engagement in our ecosystem continues to grow at a fast pace. The number of both transacting and paid accounts on our digital content stores reached a new all-time high during the June quarter, with paid accounts increasing double digits in each of our geographic segments. In aggregate, paid subscriptions grew more than 35 million sequentially, and we now have over 550 million paid subscriptions across the services on our platform, up 130 million from a year ago. With this momentum, we remain confident to reach our increased target of 600 million paid subscriptions before the end of calendar 2020. Wearables, home, and accessories established a new June quarter record with revenue of $6.5 billion, up 17% year over year. Our wearables business is now the size of a Fortune 140 company, and we set June quarter records in the majority of markets we track. Importantly, Apple Watch continues to extend its reach, with over 75% of the customers purchasing Apple Watch during the quarter new to the product. Next, I'd like to talk about the impressive performance of Mac. Revenue was $7.1 billion, up 22% over last year, and a June quarter record. We grew double digits in each geographic segment and set all-time revenue records in Japan and rest of Asia Pacific, as well as June quarter records in the Americas and Europe. Customer response to our new MacBook Air and MacBook Pro launches has been extremely strong. iPad performance was equally impressive, with revenue of $6.6 billion, up 31%, and our highest June quarter revenue in 8 years. Demand was strong around the world, with double-digit growth in each of our geographic segments, including a June quarter record in Greater China. The launch of our new iPad Pro has been received incredibly well in every region of the world. Both Mac and iPad are extremely relevant products in the new working and learning environments, and the most recent surveys of consumers from 451 Research measured customer satisfaction at 96% for Mac and 97% for iPad. Around half of the customers purchasing Mac and iPad during the quarter were new to that product, and as a result, the active install base for both products reached a new all-time high. Our retail business had record June quarter revenue thanks to the performance of our online store. We set records in all geographic segments and grew across all major product categories. In June, we launched Apple Card monthly installments for more products in our US stores, allowing customers to pay for their devices over time with 0% interest. We're very pleased with the level of customer interest this new offering has generated. In the enterprise market, we continue to see companies leverage Apple products and offerings to successfully navigate their businesses through COVID-19. In healthcare, we're seeing rapid acceleration of telehealth to support a more flexible model of patient care. Many hospitals, such as UVA Health, Rush University Medical Center, and UC San Diego Health, are using apps on iPad and iPhone to help triage, monitor, and care for patients who are at home. This helps free up hospital capacity to support patients who need inpatient care while enabling continued care for patients who do not require in-person visits. Since many call center employees are currently working remotely, Apple Business Chat has proven an invaluable tool for staying connected with customers. This quarter, HSBC deployed Apple Business Chat in its US and UK contact centers. Apple Business Chat provides a flexible and secure channel for digital banking assistance through a native Apple experience, improving the efficiency and experience for both customers and agents. We are seeing similar adoption by hundreds of other organizations. Let me now turn to our cash position. We ended the quarter with almost $194 billion in cash plus marketable securities. We issued $8.5 billion of new term debt, retired $7.4 billion of term debt, and increased short-term borrowing facilities by $1.1 billion during the quarter, leaving us with total debt of $113 billion. As a result, net cash was $81 billion at the end of the quarter, and we continue on our path to reaching a net cash neutral position over time. We returned over $21 billion to shareholders during the June quarter, including $3.7 billion in dividends and equivalents, and $10 billion through open market repurchases of 31.3 million Apple shares. We also began a $6 billion accelerated share repurchase program in May, resulting in the initial delivery and retirement of 15.2 million shares. And finally, we retired an additional 4.8 million shares in the final settlement of our 15th ASR. As we move ahead into the September quarter, I'd like to provide some color on what we are seeing, which includes the types of forward-looking information that Tejas referred to at the beginning of the call. Similar to last quarter, given the uncertainty around the world in the near term, we will not be issuing revenue and margin guidance for the coming quarter. However, we will provide some additional insight on our expectations for the September quarter for our product categories. On iPhone, we expect to see recent performance continue for our current product lineup, including the strong customer response for iPhone SE. In addition, as you know, last year we started selling new iPhones in late September. This year, we project supply to be available a few weeks later. We expect the rest of our products categories to have strong year-over-year performance. For services, we expect the September quarter to have the same trends that we observed during the June quarter, except for Apple Care, where during the September quarter a year ago, we expanded our distribution significantly. As a consequence, we expect a difficult comp for Apple Care, also considering the COVID-related point of sale closures this year. For gross margin, keep in mind that we will have a different mix than in prior years, as I just explained. For OPEX, we expect to be between $9.8 and $9.9 billion. We expect the tax rate to be about 16.5% and OI&E to be $50 million. Also today, our board of
There you go.
directors
You
has
heard the
declared a
date of the
cash
split.
dividend of 82 cents per share of common stock, payable on August 13, 2020, to shareholders of record as of August 10, 2020. And finally, today we're announcing a 4-for-1 split of Apple common stock to make our stock more accessible to a broader base of investors. Each shareholder of record at the close of business on August 24, 2020, we received 3 additional shares for every outstanding share held on the record date, and trading will begin on a split-adjusted basis on August 31st, 2020. With that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we please have the first question?
Yes, that will be from Katie Huberty with Morgan Stanley.
Thank you. Good afternoon. Tim, in light of the economic adversity that you talked about in the prepared remarks, can you just walk us through how Apple's leveraging finance and trade-in programs to make technology more affordable and accessible during this period, while also, addressing the opportunity to recycle and reuse products, and maybe also extend that to how these programs might expand over time? And then I have a follow-up.
Yeah, as Luca mentioned, in June we actually rolled out to the overwhelming balance of our other products the ability to do interest-free financing in our stores with payments, and that's in addition to trade-in, which is becoming a more common trend now, which I think is terrific because it is great for the environment. And it acts as a subsidy, if you will, against the price of the new phone. And so when you compound these 2 things with the financing and the trade-in, it makes the product super affordable. And we're really happy with what we're seeing in that regard.
And then as a follow-up, just specifically to iPhone, the category returned to growth. As you pointed out, the installed base is larger today. Our math would suggest that replacement cycles in some cases are elongated. And then you have the affordability element that you just discussed. Does all of that combine to build confidence that we're entering a longer period of iPhone revenue growth after what's been 6 quarters of decline?
Okay, we're just waiting
we're
for
very
Amazon
pleased with
start.
how we did
It's
on
supposed to
iPhone.
start relatively soon, so we'll wait
better
for it.
than we
Once
thought,
it starts, we can get
largely
going.
because, as we pointed out in the prepared
I
remarks,
appreciate
May
you
and
guys
June
who
were much
are
better.
subscribed.
If you look at
Those who like,
iPhone
we're just waiting. The time's up on
in
Amazon's
totality,
earnings,
the things
so
that get me very
we'll get a good
optimistic
look
is
at
the
it
size of
soon.
the active install base.
Why does that look weird?
The fact that
That does look weird, doesn't it? Get the webcast going here. So we're still waiting. Webcast has not started yet. Once it starts, I'll let you guys know. Oh, here it goes. I appreciate all the subscribe guys. Thank you. And likes.
Thank you for standing by. Good day, everyone, and welcome to the Amazon.com Q2 2020 financial results teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question-and-answer session. Today's call is being recorded. For opening remarks, I will be turning the call over to Director of Investor Relations, David Fields. Please go ahead.
Hello, and welcome to our Q2 2020 financial results conference call. Joining us today to answer your questions is Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2019. Our comments and responses to your questions reflect management's views as of today, July 30th, 2020 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During the call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic conditions and customer spending, world events, the rate of growth of the internet, online commerce and cloud services, and the various factors detailed in our filings with the SEC. This guidance also reflects our estimates to date regarding the impact of the COVID-19 pandemic on our operations, including those discussed in our filings with the SEC, and is highly dependent on numerous factors that we may not be able to predict or control, including the duration and scope of the pandemic, including any recurrence, actions taken by governments, businesses, and individuals in response to the pandemic, the impact of the pandemic on global and regional economies and economic activity, workforce staffing, and productivity, and our significant and continuing spending on employee safety measures, our ability to continue operations in affected areas, and consumer demand and spending patterns, as well as the effects on suppliers, creditors, and third-party sellers, all of which are uncertain. Our guidance also assumes, among other things, that we don't conclude any additional business acquisitions, investments, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now I'll turn the call over to Brian.
Thank you for joining us today. I'd like to start by thanking and recognizing the contributions of hundreds of thousands of Amazon employees and delivery partners, and hundreds of thousands of small and medium-sized businesses who are working hard to serve our customers all around the world in these uncertain times. Amazon's second quarter was another highly unusual quarter. As I mentioned on our last earnings call, we began to see a significant increase in customer demand beginning in early March, and demand remained elevated throughout Q2. Strong early demand in groceries and consumable products continued into Q2, while demand increased during the quarter in our other major product categories like hardlines and softlines. At the same time, we continue to focus on stepped-up employee safety, particularly in our fulfillment and logistics operations, to help ensure the safety and well-being of our employees and partners. In Q2, we incurred more than $4 billion of COVID-related expenses, getting products to customers and keeping employees safe. The largest portion of these costs related to compensation for our frontline employees, including higher hourly wages through the end of May and a more than $500 million thank you bonus in June. We also experienced productivity headwinds in our facilities. This included changes to over 150 of our processes to provide for social distancing, as well as costs to onboard and train over 175,000 new employees who were hired to meet the higher customer demand. This $4 billion also included investments in personal protective equipment for employees and enhanced cleaning for our facilities. Our consolidated revenue and operating income significantly exceeded the top end of our guidance range. Strong top-line performance was driven by increased consumer demand, led by Prime members. We continue to see high Prime member engagement throughout the quarter. Prime members shop more often with larger basket sizes. Worldwide streaming video hours doubled year over year, driven largely by Prime Video. We're reaching more customers with our grocery offerings. Online grocery sales tripled year over year. Existing Prime member renewal rates improved, and the Prime member growth rate accelerated both in the U.S. and worldwide. Our 3P sellers, who are largely comprised of small and medium-sized businesses also stepped up to help make more selection available for customers. And as a result, these small and medium-sized businesses have seen significant growth in their sales. Our third-party seller services revenue grew faster than online stores revenue in Q2, with strong growth in both fulfillment by Amazon and merchant fulfilled, or MFN, seller sales. Third-party units continue to represent more than half of overall unit volume, helped by improved quarter-over-quarter growth in active sellers. We are more committed than ever to supporting the success of the hundreds of thousands of small and medium-sized businesses that sell their products in Amazon stores. We were able to meet this heightened demand because we were also able to open up more fulfillment network capacity as the quarter progressed, with faster delivery across more selection. I'd point to a few capacity improvements that have allowed us to enhance throughput. First, our regular headcount grew 34% year over year as of the end of Q2 and continues to grow. We welcomed more than 175,000 new employees in March and April, many of whom were displaced from other jobs in the economy. As we've seen demand remain high, we are in the process of bringing 125,000 of these employees into regular full-time positions. I would also note that Amazon has created more jobs over the last decade than any other company, and we are proud that we're continuing to create good jobs with industry-leading wages and great benefits during this challenging time. Our combined number of regular and seasonal employees is currently over 1 million. We've also been able to expand the output in our existing facilities as we've had time to implement, learn, and iterate on the new process paths we put in place. Additionally, as a reminder, Q2 is typically our lightest volume quarter for the retail business. That's not the case this year, but what that's meant is that we can flex into space normally used for second half peak demand. This led to strong operating leverage in Q2. As we move towards peak in the second half of the year, we will ramp up our space needs even further, and we'll be adding significant fulfillment center and transportation capacity in the second half of the year. Turning to AWS, this is now a $43 billion annualized run rate business, up nearly $10 billion in run rate in the last 12 months. Customer usage remains strong, although growth varies across industries as a result of the COVID-19 crisis. Lastly, I'll touch upon our Q3 guidance, which we provided as part of our earnings release. A few additional data points on this guidance. We expect to incur more than $2 billion in COVID-related expenses in Q3 to help keep employees safe, including continued investment in social distancing, PPE, and testing. Costs are expected to be lower than in Q2, primarily due to better cost efficiency at the high demand levels we are seeing. In addition, I'll remind you that the third quarter is typically when we open the majority of our new fulfillment network capacity, and we expect the same this year. We continue to invest meaningfully, including $9.4 billion in CapEx and finance leases in Q2 alone, an increase of 65% year over year, primarily driven by investments in our fulfillment and logistics footprint. Once these buildings open, they are a headwind to profitability as they ramp up and we prepare for Q4 peak. In 2019, we increased network square footage by approximately 15%. This year, we expect a meaningfully higher year-over-year square footage growth of approximately 50%. This includes strong growth in new fulfillment center space, as well as sort centers and delivery stations. We expect the majority of this capacity to come online in late Q3 and into Q4. Lastly, we plan to host Prime Day in Q4 this year rather than Q3 as it has been in prior years. The one exception is Amazon India, which will host Prime Day on August 6th and August 7th. In summary, we know that people are relying on online shopping more than ever during this unprecedented time, and we are working hard to add capacity to serve customers. We're extremely grateful to our employees across Amazon for continuously stepping up to meet the needs of customers. With that, let's move on to Q&A.
At this time, we will now open the call up for questions. We ask each caller, please limit yourself to one question. If you would like to ask a question, please press *1 on your keypad. We ask that when you pose your question, you pick up your handsets to provide optimum sound quality. Once again, to initiate a question, please press then 1 on your touch-tone telephone at this time. Please hold while we poll for questions. Your first question comes from the line of Eric Sheridan with UBS. Please proceed with your question.
Thanks so much for taking the question. Maybe I could just dive in on the normalized trends you're seeing as you exit June and get into July. You know, you made a push into essentials and de-emphasized non-essentials, as we talked about on the last earnings call. Where are we in terms of the company getting the mix between essentials versus non-essentials right in terms of offering to customers? Where are you in terms of returning to normal on next day and 2-day shipping initiatives to drive Prime? And if there was any color on the state of affairs with either of those by geo or region of the world, that would be great. Thank you so much.
Sure, Eric. Thanks for your question. So first on the trend. So if you remember, as you know, we exited Q1 and spoke at the end of April. We had taken a lot of steps in March and April to first limit the incoming non-essential products into our warehouses, and then we reversed that or eliminated that decision in mid-April. So we started to normalize on our channel mix in, I would say, you know, as we moved into late April and early May. We expected that because a lot of the sellers can toggle between MFN or FBA sales, that we would see MFN drop as FBA picked up. But to a large extent, MFN remained strong even as FBA picked up. So we had a very favorable mix, if you will, coming from March on. It started to normalize a little bit more to normal levels towards the end of the quarter, but MFN still remains high. On the product side, a lot of what we saw in March and early April was sales of consumables and groceries and safety items, and we talked a lot about the fact that that was coming at pretty much zero cost, or excuse me, zero profit when you factored in the COVID-related costs. We got better on our cost structure, and we also resumed a more normal mix in, I'd say, early part of May. So since then, I would say it's getting closer to what we call a more normal mix. Demand is still super high. What we're seeing on, you know, it's driven by Prime members and Prime member engagement. They're shopping more often. They have larger basket sizes. There's still a heavy component of online grocery sales tripled year over year in the quarter as we added capacity there. So while there's shifts in the mix based on what customers want, it's looking a little more normal and it's staying at a very high level. On one day, you know, we realized that, you know, our first priority is to keep our employees safe, and the second is to focus on getting our capacity increased. Once we've done that, you know, we're working very hard to get faster shipments, and we've seen the 1-day and 2-day recover through the quarter, but it's still probably considerably behind the going in rate before any of this happened. So we'll continue to work on that, but again, first priority is definitely keeping employees safe, and second is increasing our capacity.
Yeah, and this is just David. I think, you know, just from a geographic perspective, you know, Brian's opening comments there, a lot of these order trends and activity are, you can see that both the North America and the international segment are growing well. So a lot of those, you know, kind of trends in category performances and first party and third party seller growth, whether it be merchant fulfilled or FBA sellers, we're seeing a lot of growth across the board, and kind of similar type broad trends when you think about the U.S. and North America, as well as our international regions, particularly our more established international regions.
Our next question is from Mark Mahaney with RBC. Please proceed with your question.
Okay, so just a quick follow-up on Eric's question. Brian, when do you think you'll get back to par in terms of 1 day being 1 day? And then secondly, these profit levels are super high now. They're becoming super high at the company. You know, if you X out the COVID costs, is Jeff aware of how profitable the company is becoming? Is he happy about it? And I'm kind of being facetious, obviously, when I ask that. But what I also want to ask really is, when you think about new investment areas, you know, and the top of the list, you know, maybe some new international launches or really building out some of the markets that you've, like India and Brazil and Mexico, or the business-to-business operations. Like, there's a ton of new investment areas, and it seems like the Amazon, you know, historically, and I'm sure it's the same now, would be using this, you know, kind of revenue surge and really investing aggressively in these new areas. So just talk about that. I know you've got spend on COVID, but, you know, as you think about the next 3 to 5 years, and you've got these really profit surges, how can you deploy those, or how do you want to deploy those into some of the newer investment areas? Thanks a lot.
Sure. Thanks for your questions, Mark. First on when will we get back to par? We don't know yet. We're getting progressively better, but we're also balancing what is going to be very stepped up demand and capacity in Q3 and Q4. So if you look at our historic run rates and can see how big a quarter Q2 was. Q2 was actually higher revenue than Q4 of last year, which is unheard of, and Q3 is now forecast to be also higher than Q4 of last year. So we've kind of moved the peak forward, and for different reasons, and we're trying to, mainly, like as I said, first priority is making sure our employees are safe and that we continue to do social distancing and keep everybody, safe and healthy. Second priority is getting capacity online because we do not have. In Q2, we generally have lower revenue, and in Q2, like I mentioned, we were able to use the excess capacity that did exist to serve the higher demand. Now, as we move into Q3, we need to build the inventory more for Q4, and we've run out of space. So we've got our hands full on that challenge, but we've got a really good team that's been working very hard, probably since late February on this issue. And when you talk about profitability, I will also mention that there are a couple of expenses that have gone down in the interim. Marketing, we cut marketing probably by about a third in Q2 as mainly because we're trying to manage demand. It started to normalize and get back to its somewhat normal levels in at the end of Q2, but and therefore we'll see a higher level in Q3. But certainly marketing costs were lower. I probably saw that in a lot of companies. Travel expenses have almost ground to a halt. Meeting costs, even medical costs in some examples, or in some cases have been delayed as people don't go to the doctor or don't go there as quickly. We think that'll normalize over time. And as far as investments, I think we've got a lot of investments already in play, so I don't think it's a matter of necessarily accelerating investment or we're always looking for new investments that make sense to us. But during this time, I would say we've actually accelerated our ops investment. We've pulled in capacity that we probably didn't think would be needed until 2021, maybe later. Excuse me. On grocery, we've also greatly expanded our grocery delivery capacity, and that's probably ahead of schedule.
Yeah, and this is Dave. Just to add to that, I think Prime is such a big focus, and some of the growth statements that Brian talked about at the opening of the call, whether it was strength in paid Prime membership and the acceleration we saw in the U.S. or worldwide, or some of the usage stats like the grocery momentum or the doubling of video hours. It's for us, it's just another encouraging sign. We think there's still a lot more value we can add to that program, and that's not just in the United States where we've got a sort of a broader set of services than some of the other regions, but really focusing on supporting in some of those other regions. And so we've got places like Australia, the Middle East. We've talked about India many times, but a lot of focus on building that out. I think what's great about a place, all geographies, but a place like India is we're really focused on digitizing the Indian sellers. A lot of micro, small, and medium-sized businesses there. We launched some new features there to help support the digitization efforts with some of those brands, and just a lot of great work being done by that team. They have some goals there around getting more sellers on board and hiring many more people as well. So a lot of focus there.
Our next question comes from Brian Nowak with Morgan Stanley. Please proceed with your question.
Thanks for taking my questions. I have two. The first one, Brian, is going back to the investments, and you're often making multi-year investments for customers and customer offerings, and you're the man behind the capital allocation plan. I guess I'd be curious to hear about. Can you give us some examples of areas of investment that may have been pushed out this year because of shelter in place and the higher demand that you've been seeing? So what were areas where you thought you were going to spend more at the start of the year than you actually have now in the current 2020 plan? And then the second one, the international strength, appreciate the color on Europe and Japan. Nice to see the profitability. Maybe just talk to us sort of qualitatively about some puts and takes around your core international markets, Europe and Japan, and how to think about whether or not they could be more or less profitable than the U.S. long term. Thanks.
Sure. I think you'll starting at that second one, you'll notice that the international segment was profitable this quarter, and that's a great sign. It is heavily driven by the pickup in demand that we saw. As I've mentioned, I believe in multiple calls, what's going on internationally is we have some very healthy, established countries that we've been in a long time, and we have probably accelerated their adoption of Prime benefits. We've pushed video and devices and music and other things to those countries probably earlier in the life cycle than you would have seen in the U.S. So there's a bit of a forward investment on Prime benefits in many of those countries. But what you also see are investments in new countries. Obviously, India is the biggest one, but also, to a lesser extent, the Middle East, Brazil, Turkey, and Australia are recent additions. So there's always an element of expansion going on there. Advertising is growing, so that's a good source of profitability. But if you look at what happened in Q2, it was essentially just the much higher volumes than we had anticipated or had on a run rate. So our fixed costs were leveraged to the hilt. Obviously, we had to add some capacity and things in transportation and fulfillment centers, but all other fixed costs were, pretty much leveraged on that higher demand. The UK in particular was very strong because there's probably more stay-at-home orders and the way the economy was developing in the UK. We had a very, very strong quarter there. So I would say that the surge in demand internationally also helped drive that profitable, maybe a little earlier than the trajectory would have shown, and not sure that is going to continue for the next couple quarters. But it's a good it's a good sign that we could leverage that, and a lot of the same trends in the U.S. were apparent internationally: higher Prime, more frequent Prime purchases, and higher basket sizes. So all good signs, and perhaps we got a glimpse of the future on the demand curve. Your second question is on slowing investments. The list is very short on what we've had to slow down. It's mostly, it hasn't been done necessarily for cost reasons. It's been done for people reasons. The one I point to is studios. We've had to delay production. I think most studios have, and that's been augmented by some new things like our Amazon Cinema, where we're having first-run movies. And so I think in this time when people want entertainment, people are having trouble creating new content across the board, and that's a bit of a challenge. But it's not something we're doing intentionally. We're doing it to protect the actors and film crews, and we think that's the right decision. As I said, a lot of the investments are being pulled in, especially on the ops side and grocery delivery, same-store pickup. A number of Whole Foods stores that you can pick up deliveries on tripled this quarter. So the list is short on things that we're slowing down on, I would say. It's just we're adapting and probably looking at whether some things have changed and creating some things for the new environment, especially in the entertainment area.
Our next question comes from Doug Anmuth with J.P. Morgan. Please proceed with your question.
Thanks for taking the questions. I have two. Brian, first, just curious about your overall thoughts on how the e-commerce adoption curve has been shifted here over the next few years, and anything you can share around behavior for new and existing customers. And then separately on AWS, the $43 billion run rate obviously slowed some in the quarter, but hoping you could comment just on the pace of IT decision-making in this environment, whether you're still impacted by some clients, more highly exposed to challenged verticals, and due to those factors, is it possible that AWS can accelerate growth going forward? Thanks.
Yeah, let me start with that second one. Thanks, Doug. So in the AWS segment revenue, what we see are companies working really hard right now to cut expenses, especially in the more challenged businesses like hospitality and travel, but pretty much across the board. We're helping them. We're actively, with our sales force, looking for ways that we can help them save money. This includes things like scaling down the usage where it makes sense, or benchmarking their workloads against our architectural best practices. So that's not going to help our usage growth in the short run, but it'll help those customers save money, and we think that's the right thing to do, not only for their success, and so they can come out of this at a better shape, but also for the long-term health of our relationship with them as an AWS provider. But we're also seeing a lot of companies that are really wishing that they had made more progress on the cloud, because they're seeing how companies that are on the cloud can turn it into a variable cost and either scale up or scale down depending on their particular situation. They realize their on-premises infrastructure is not really flexible to go up or down, and especially in a time of sinking demand, it's a big fixed cost for them. So we expect, we're seeing migration plans accelerate. They're certainly not going to happen overnight, but we see companies moving more in that direction. We think that'll be a good long-term trend. And there's certainly winners in this area right now. Things like video conferencing, gaming, remote learning, and entertainment all are seeing usage growth, and it's a bifurcated world out there. So on your e-commerce adoption, I think it's hard to tell. We're super encouraged by the fact that grocery delivery has picked up, and that's been accelerated versus what we would have thought. We certainly are glad to be there for our Prime members who are shopping more frequently and buying more. We do know that there's reasons that there are other options are limited. I mean, there's always retail options out there, especially to go pick up in store, but less people want to go into stores perhaps now. So we're going to have to see, what is maybe a step up in the curve and getting to a point quicker versus, what are somewhat one-time sales, and hopefully things like masks and gloves and cleaning supplies in the fullness of time become one-time purchases, but we'll see. And sorry, your last point was on new customers versus existing customers. We're seeing similar trends. We're seeing good pickup in frequency and basket size for new members in Prime as well. Certainly not the same as people who have been Prime members for a number of years, but it's encouraging. And as you saw, Prime growth retention has increased. We've accelerated the growth of Prime members both in the U.S. and internationally. So that's a good sign that we're happy about, and we hope that has long-term ramifications.
Our next question comes from Ross Sandler with Barclays. Please proceed with your question.
Just to follow up to that last comment. So the Prime behavior for international Prime members, you guys have talked about how, like, in the 16, 17 countries, the overall service levels are a little bit behind, selections a little bit behind. So has the last few months in the pandemic closed that gap meaningfully in terms of GMV per Prime member for international versus what you see in the U.S.? Any comment there? And then on the 3Q guidance, you've pushed Prime Day for Western markets into 4Q. So how much of the deceleration, it's obviously a really strong number for 3Q, but the growth rate's decelerating a little bit. Is that mostly from Prime Day, or can you just talk about what kind of behaviors you're seeing right now as you go into 3Q? Thank you.
Right. Well, we ramped up through the quarter in Q2 and ended up with 41% year-over-year growth in on an FX neutral basis. A lot of those trends are continuing into Q3. You see our revenue range is $87 billion to $93 billion, coming off a $89 billion quarter. So I would say that if you look at the growth rate, that translates into somewhere in the 24 to 33% growth rate in Q3. So I can't break out exactly the Prime impact because there's, but suffice to say it's a big driver on why 41% growth in Q2 turns into 24 to 33% growth in Q3 on what turns out to be higher revenue volume. And then on Prime behavior, it's I can't really give you more on that because it is actually a very localized set of stats by country. An international aggregate does not matter that much. And what I would say is generally what we're seeing is similar trends in international in response to COVID purchasing patterns. I wouldn't say it closed the gap. I would say they both went up, and we'll see how it goes from there. I think there's definitely any differences in selection or differences in shipping. There's a myriad of factors that go into a Prime member's decision to be a Prime member and to what they buy and what they use as far as our benefits that we give them. So I don't want to make too many sweeping comments on that right now.
Our next question comes from Brent Thill with Jefferies. Please proceed with your question.
Thanks. Good afternoon. I was curious if you could just expand on EWS. There was a little bit of a slowdown across the board in a number of the cloud numbers. I'm just curious if there's a common thread that you're seeing there, and perhaps just talk about the backlog. I know you've disclosed the backlog has been improving in the filings, but a little more color on AWS would be certainly helpful. Thank you.
Yeah, sure. I'll give you the backlog number. It grew 65% year over year and 21% quarter over quarter. So, that's healthy, and we have, the average contract length is over 3 years for our AWS contracts. I would say, contract volume and negotiations are strong and, have maintained through this period. It is that's a good sign. It really does boil down to short-term versus long-term incentives here for a lot of our customers. If you're in an industry that's been heavily impacted by COVID in the economy, you're looking for ways to save money, and you're trying to do it quick. And we're trying to help in that regard. And one of the best ways to save money long-term is to use the cloud. Not only to turn it into a variable cost, could be a fixed cost, but also to be able to take advantage of the partner network that we have, the security that we have, and also the constant evolution of products and services that we bring to market.
Our next question comes from Aaron Kessler with Raymond James. Please proceed with your question.
Great. A couple questions. First, maybe just one of your competitors noted that growth was slowing in some markets that have opened up, I guess probably more in Europe. Maybe just thoughts there. Are you seeing any changes in some of the markets that are starting to open up? And just any comments maybe on the Zoox acquisition, how you kind of can use that technology longer term as well? Thank you.
I imagine you mean on the consumer business, the countries
Correct.
Opening up. Yes. Well, we still see strong demand, so I don't have any particular color on that regard by country. We do think probably the UK was grew very strongly in Q2, and that I believe is starting to moderate a bit, but still stronger than normal. So don't want to go by country, but I think those trends will start to perhaps become evident. But the from our vantage point, the Prime members still continue to order more frequently and in larger basket sizes.
Yeah, and then Aaron, just on your second question on the Zoox, I mean, it's not too much to say at this point. It's still pretty early, but I think probably goes without saying it's a tremendously forward-thinking team, which resonates with us, and they really do kind of pioneer in that space, the ride-hailing space. So a lot of cool work they're doing designing autonomous vehicles and focused on the passenger, right, in front of mind in that. So I think, again, just as we think about kind of the innovation components and commitments to solving kind of problems and challenges for customers, it's pretty exciting for us to be able to work with them and bring that vision to fruition in the years ahead.
Our final question comes from Justin Post with Bank of America. Please proceed with your question.
Great. A couple questions. Obviously, a great cost quarter on the leverage side. Any changes in e-commerce gross margins to call out? Is scale and getting size improving gross margins, or anything on the mix shift there that's interesting? And then secondly, we talked a lot about one-day investment last year. Obviously, the shipping times were impacted by COVID, but are you back to kind of normal times, and where are you on the one-day investment? Thank you.
Sure. On one day, again, we're first prioritizing employee safety. We have a lot of effort in that regard. We've changed over 150 process paths. We've instituted social distancing, cleaning, temperature taking, both with our warehouse employees and also our transportation employees. So that's really still priority one. And second is capacity expansion, especially as we head into the second half of the year, which generally sees a step up in volume even over the first half of the year. So we are improving the percentage of one day. We're not back to where we were pre-COVID. We don't think we're going to be back in the short run, but we will continue to improve it, and hopefully it'll be less noticeable for our consumer base. On the gross margin side, it's very much a mixed bag right now. There's before the COVID outbreak, the positives were generally AMZL costs, or delivery costs were becoming more efficient. Advertising and AWS were certainly a strong component of gross margin increases. Product mix could go either way depending on the country. But as this COVID has played out, consumables and grocery, which are lower margin, have started to have been a negative impact on gross margin. But we feel good about where we are. Gross margin for the quarter was 40.8, and what was down 200 basis points from last year. It's probably more tied to the addition of one-day shipping. And even though we didn't do as much one-day shipping as we've been doing post-COVID, the cost of one-day shipping are already built into our structure. We've already reconfigured our network. We've already created the capacity to be able to ship. It's just a matter of whether or not we can get it out through the warehouse and to you in one day or not.
Thanks for joining us today on the call and for your questions. A replay will be available on our investor relations website at least through the end of the quarter.
Sorry, my mic was muted. So, all right, guys, so that was the earnings call for both Amazon and Apple. Thanks for coming and hanging out with us. Hopefully I see you guys in the future. If you guys subscribe, thank you guys for the likes. And the next ones I'm going to focus on is going to probably be Nikola, then Workhorse, and then Neo once those comes out. So those will be interesting. But good news, hopefully we'll see the stock all go up, especially Nasdaq, tomorrow. So thank you again for the donations. I think Andrew donated $30 and Chris donated $5. And then Archie donated $5. So thank you guys for those donations. I'll see you guys next time.